It takes a couple of minutes to make a switch to now we're live. Hi, everyone. Welcome to another episode of Tuesdays with Terry, Real Estate Talk. Tonight, we have a special guest, Chip Lubeck from Lubeck Realty Group. And before we get into talking about some real estate issues, I'd just like to ask Chip to give us a little background on his real estate background and tell us how Lubeck Realty Group came about.
Well, thanks for having me, Terry. I've watched your show, and it's a pleasure to be here. So the Lubecks have been in real estate business back into the 50s, late 40s, 50s in New Jersey. My grandfather was a builder. My dad worked for him, and the story goes that my dad was working on a chimney in the middle of the winter, and a guy pulled up. They were building spec homes, and a guy pulled up in a Cadillac, showed the house, sold it, and my dad said, "That's crazy. That guy just made more money than I make, and he's in a Cadillac in a suit, and I'm up here freezing on the balcony building a chimney." And he turned around, started what was then called Lubeck Agency in New Jersey, and did mostly commercial, residential development and sales, and then brought the company to Florida in 1974. We bought a building on Singer Island in 1977, and I'm sitting in the same building still. We've had a few name changes. Maybe 15 years ago, we kind of diverted to a company called One World Realty. We're doing a lot of international work in Brazil and the Bahamas and Argentina, and I partnered up with my good friend Don Erschlitz, and we ran that company successfully for a good while. And then we decided, my sister Nancy and I worked together, and we decided about 2 years ago to just bring our name back into the business, and we rebranded it as Lubeck Realty Group. Unfortunately, my good friend Don passed away in December, and that was kind of the end of that. I miss him, but we just, we rebranded and started as Lubeck Realty Group. We've been in the real estate business forever, so our company is, we're a regular real estate sales company, but our family develops, and we buy and sell and flip homes, and we have commercial properties in a couple states, and so we're just a not big, but just a getting by real estate family business. And I've been doing it since I graduated from college in 1988 with a finance degree. I came home in August of that year, and my dad said, "Well, you want a job?" I said, "Sure, I have a degree." And he said, "Welcome to the state of Florida. You have a real estate license, and you can work in the state, and here's your desk, and see you later." So that's how it started. I've been sitting here at the same office for 33 years, going on 33 years. So it's wonderful. I work every day with my sister, which is a blessing, and my mom. Our dad died 16 years ago, but my mom is 92, and she comes in about 3 days a week, and she still handles most of the books of our operation. So it's really great to be able to work with the family.
That's amazing. The way the real estate industry has been going the last few years. It's really going to large large brokerages
Mhm.
and mega teams. Uh,
Yep.
Single agents are really struggling. I did the Keller Williams experience for 10 years, and it was good. And it was good. They had great training back then. It's a different company now.
Mhm.
It's more of a technology company. I'm a little bit older, and I don't quite get all the technology, artificial intelligence and stuff. I don't really need that. Seems like you guys kind of went in the same direction and got out of the large broker business and became more of a like a boutique agency.
Yeah, it's the way we always ran it. Interesting, we were approached over the years, but the way we ran our business was not acceptable to a lot of those companies. Um, the one guy said, "Well, if we go, your mom's got to go, right? She can't." And so that was it. Like, I'm not firing my mom, right? I mean, that ain't gonna happen. And so, like for better for worse, I don't know. Like I mean, I maybe should have fired her and uh, and let her retire. Maybe, I've been part of the board of realtors for my whole career, and I have tons of good friends in all those companies, and they're wonderful. Our focus has just been on taking care of our customers. Um, we work a lot of referrals, and that's where we get our business from, and that's just our choice. For better for worse, no one's right or wrong. It's just how the Lubecks have done it for a long time, and it's probably how we'll just continue to do it for a long time coming.
Well, there's a lot of a discussion about the modern real estate agent and the business has changed somewhat over, especially over the past year with the
Mhm.
pandemic. And we have all these third parties now getting into actually buying and selling real estate. But uh, I don't think you're going to be able to get rid of the individual touch that smaller brokerages can offer to clients. Uh, it sounds like that's pretty much where you guys are at.
Yeah, the things that we focus on, and again, this is our way. But I've been a licensed state certified real estate appraiser for 30 years as well. So my background is in valuation. I have a finance degree. I've been selling real estate. I buy and sell my own, and so what I try to bring to the table is, hey, look, I do this too, right? I mean, I own properties. You're talking about buying investment properties. I've done it. You want to build something? I've done it. You want to buy commercial? I've done it. And I've done appraisals for all the big banks throughout the years. And I work with a lot of lawyers now. I don't do much bank work anymore, but I work with a lot of lawyers on valuation for taxes and things like that. And that's what I bring to my clients. Enough of them appreciate it for us to move forward in our business, and there's opportunities out there. The market has definitely changed. The real estate industry is constantly changing. It's changed, Terry. It's changed so many times in my career that I can't even tell you how many times. Like discount brokerage came and went twice already. There's constantly new models. The thing I see different about the models of today is the money, right? There's a lot of money backing a lot of these models. And we'll see if it works. But my dad always told me that there's enough for everybody to make money. So you can't be scared or concerned about someone else's model. You do what your model is and how your model works for you. And there's people out there that will gravitate towards what you can offer them. That's why there's thousands of lawyers and thousands of garage door companies, and everybody's a little different, but they find their niche and their way in the market.
Yeah, there's enough business out there for everybody. Um, One thing I want to bring up and discuss with you tonight, you've
Yeah.
been up on Singer Island for a long time, and I know I first came down here in 1981. I lived on Singer Island for about a year, and it's really changed a lot since then, and I'm sure it's changed a lot since you guys first came down here. Uh, But what's happened the last week or so with the condo collapse down in Surfside, and I had never heard of these 40-year recertifications before. And that's something new to me. Um, I think that's going to uh, reverberate up and down the coast. Um, it doesn't seem that Palm Beach County does the recertification.
Yeah, I'll be honest with you, it's not something that we all talked about on a regular basis. The upkeep of the buildings was a priority for us for sales. You talk to the manager about what's pending and what they've done, and what kind of restoration they have done, but you've never delved into the, can I see the certification? Can I see when the last time the substructure of the parking lot concrete slab was reinforced? We didn't talk. It wasn't a topic, and I think that you know this is a horrifically sad event that took place down there, and my heart goes out to those people. Um, and I hope two things. I hope that it opens the door for discussion on these older buildings, and the state, the counties, the nation comes together and says, look, we need to bring together good companies to check these buildings out for the safety of everybody involved. I hope it doesn't go too far where they start. You saw in the news yesterday. I think they're talking about shoring a building up with jacks. I hope it doesn't go too far where everybody gets panicking. Um, but at the same time, you want the buildings to be safe. On Singer Island, we do have plenty of buildings that are in the, they're built in the 70s. I mean, Champlain was built in I think 81. So we have buildings older than that here on the island. And it will be interesting to see, what aspects of that were determined to be the problem. Was it undermining? Was it new buildings in the area? Was it just happened? Was it just a bad batch of concrete? I don't know what the answer is going to be, and I hope that they can find out what the cause was and learn from it to go quickly through these other buildings.
Well, yeah, I mean, you don't want to have a panic set in, and they've already evacuated a couple buildings down there, and there's some
Yeah.
debate on whether, that was necessary or not. But, codes have changed a lot over the years. And when I was selling a condo, uh, the biggest thing that I always worried about is what assessments are coming down the line. I mean, how long's it been since the roof has been fixed? The windows, these are all things like, the tab for the Champlain was like $15.9 million. That's a hefty assessment for
Yeah.
everybody in those units, even though some of those units were, $1.5 million, $2 million. Most of them weren't.
Right.
And up and down the coast, and even on the other coast, years and years ago, I first came down to Florida. I lived in Madeira Beach. The Madeira Beach, Reddington Beach, Indian Shores, they were all these little low-rise, family-run motels. You can't even see the water now. From Clearwater all the way down to Gulfport, you can't see the water. It's all high rises,
Oh, highway.
and you know, building codes have changed. You
Yeah.
know, concrete has changed. It's gotten better, but yeah, I think part of the due diligence now is people are going to want to see some information on the structure of the building. So
Yeah, and maybe 40 years is just too long. It is a long time. I mean, when you turn 40, you start feeling worse than you did when you were 20, right? So it exponentially gets your body depreciates. So maybe these buildings just need to be checked, at 20, and then every 5 or 6 years after that or something. I don't know. I don't know the answer. It's not my
I
it's
agree.
over my pay grade, but I hope for their sake.
Uh, I do know this though, that um, when I first moved down here, I sold building materials, and there was a big boom down here. I mean, that's when even where I'm living at now was an orange grove
Yeah.
20, 30 years ago. Um, but these things went up really fast, and I know that one of my largest customers, one of my largest clients was the Palm Beach International Airport, and I had a lot of contractors there, and man, there was some shoddy workmanship done there because it was production, and
Yeah.
it's going to be interesting to see how this all shakes out when all the forensic engineers.
Well, what come from it, what might come is, everybody might be more involved, right? So, from the city planners to the architects and designers of these buildings, and then to the construction companies. I mean, they're all under a time frame at different times of the market. Like you said, when the market's hot and they're building them fast, concrete needs time to cure. Now, I don't know what the market was like when that building was built. Was it a hot year or a slower year? But when concrete doesn't dry overnight, and you have to give it time. And I think that maybe the construction companies will now sit back and say, we're going to build this right. And if it takes a couple extra days, then that's what we're going to do. But they all now have a stake in the game that this buildings are built to the quality of, and I'm not saying it wasn't built. It could be a fluke, but that may be going forward what happens.
Techniques have changed. I know, years ago, um, contractors cured concrete by putting burlap over the contract and watering it. Um, you don't see that anymore. Now they have chemicals to cure it. Technology changes just like it's changing in our business, and
Yeah.
it's going to be interesting to see how this
Yeah.
shakes out. Uh, yeah, I only bring that up because it's topical, and you're up there on the island, and that place has gotten so developed. I'm sure there's a lot of discussion in these condo associations going on about.
Yeah.
Um, but
There's some websites right now that I'm getting that I'm part of, and there's a lot of chatter on those, and a lot of the social sites of people that live in those older buildings saying, "I just want everybody to know that our building was checked, 5 years ago." They're putting people at ease that there was some. So obviously they're putting that out because they're getting something on the backside, right? They're getting enough people calling the office downstairs saying, "Hey, when was our building last checked?" That they're now publicly putting it out there to say, "Hey, we're good." And I hope, and I think that's going to be the big question: is when someone says it's good, what does that mean, right? One person probably is not enough. It probably needs to be multiple checked by multiple firms that don't, because you feel bad for the guy that said it was good, right? I mean, he probably didn't intentionally go down there and say you're fine. He probably thought it was compared to others that he had seen,
well,
and thought it was going to fall down.
Surfside's not very big. I mean, he might be the only building guy for the whole city.
Yeah.
Um, so I think things are gonna, there's I spent years in government, and there's a lot to be said for a small community, uh, towns, villages. Like Wellington started out as a village. There's still a,
Yeah.
but it seems kind of a missing now. Um, but you don't actually have the resources that you have to provide the constituents the services that they need. So, I think there's going to have to be some collaboration going on for some of these smaller communities like Riviera Beach, Palm Beach Shores,
Yeah.
to maybe it becomes sort of a regional effort because these consultants are expensive. But nevertheless, we'll just have to wait and see how that shakes out. It is a very sad situation. Um,
What will it'll take some time, but we'll see how that how that reverberates in the market. I mean, we're in the real estate business, right? So, I mean, our big thing would be how that shakes out in the sales of those buildings, and is are they adversely affected in other markets um, because of it? Or is the buyer going to be more weary about that, and how will that get accepted in the market? And then from an appraisal standpoint, and from a valuation standpoint, and from a lender standpoint, are banks going to lend on them? Um, I mean, I haven't, and I've never studied that building, but I imagine there's a fair few mortgages in that building. And where do the banks stand? Like, hey, it's gone, right? I mean, you can't foreclose. So it'll be interesting to see how the lenders treat that, and the insurance companies, et cetera, et cetera.
well, in what we learned a couple weeks ago on the episode with Brian Murphy is that a lot of lenders have left the market down here because they think that the risk is too great, and will we see it become more difficult to get insured on a condo? I hope not, because even if you take away these luxury condos on Singer Island, uh, and you get off the coast, uh, these condos are really the most viable option for a lot of first-time home buyers in South Florida. There's not too much on the market out there for them right now as far as single-family housing goes. But let's talk about that for a minute. I've seen a few more houses, uh, come on the market. Not a lot. It seems like there's a little bit more inventory. The days on market is still fluctuating, around 50, 55 days. Uh, are you seeing any changes that are encouraging or not encouraging?
Yeah, I see the market's still really strong. People are of this impression that these 2 to 3 days on the market is norm, right? That's extreme. Um, but the market is still fully driven by a lot of factors. So our market times are definitely short still, and I think will be for some time. And the market is a very difficult question, right? There's no really the market. There's Wellington versus Singer Island. Like Singer Island right now is we're in a little bit of a lull because the majority of the people went home for the winter time, right? So our market is still strong, but there's not as many people here. Let's face it, they leave, right? So, but the inland markets are a little different. The condo markets, the sub $300,000 market is ridiculous because not only do you have it's affordable housing, which is getting more and more difficult for anyone to find in Palm Beach County, but you have the whole investor base because on the backside you have rising rental rates. So as the rental rates rise, me as an investor, I can pay more for a house because I'm going to get the same return that I'm used to because the rates are up. So that's driving the market as well, not only from the buying standpoint and living in it, but from the investor side saying I can rent it and try to find a rental today. What was 900 is now 14, and what was 14 is now 22, and you can't find a rental. So if people are willing to pay more to rent, the cap rate rises and people are willing to pay more for the property, which jumps them up again.
Well, one of the issues with people paying more for rent is it makes it even harder for them to get in a position to become a home buyer because the housing income their housing expenses rise, and it makes the percentages don't work for loans. So,
No.
uh, hopefully something will change here. I know I've told some people recently that this isn't the time for them to buy. They're really not in a position that they think they're in to purchase a house. That it would be better for them to work on their credit, save a little bit more money down, and come back when they can get more favorable terms uh, on a mortgage. And um, you know, these people can't afford to make an appraisal, make up an appraisal shortage. They can't throw another. It's
Right.
crazy when I hear people paying. You see on the social media sites other realtors, bragging $50,000 over the asking price. Yeah, somebody had $50,000 cash to throw into that. Um, Man, is that a good investment? I don't know.
Yeah. They're at the point where they just want to get something. I mean, I have those buyers too. They just want to get it. They get frustrated with multiple offers on multiple properties, and they get to a point where they're like, just get it for me. I need to put my wife somewhere. I need to put my husband somewhere. My significant other is just done with this whole process. Let's just buy it, right? And they're willing to just wave it off, right? Just and as a realtor, I don't want to be putting them into properties that are over, in case the market corrects, which I don't think it's going to correct anytime soon. But when you factor in the taxes and then the way the insurance rates are going, these things they're not as affordable as they used to be by any means. It's not easy street living. You're paying a lot to live in these developments.
Yeah, some of the insurers that have stayed in Florida, homeowners are seeing their rates increase by 40%. Um, that's something that, and also for new home buyers, um, purchasing a house, you're not going to pay the same taxes unless you're coming out of a house
Right.
here in Florida or Palm Beach County. You're not going to pay the same taxes. Uh, there's going to be some catch up by the county to get more taxes on that property. So it's just making it a little bit more difficult for first time home buyers, and that's sad. I was looking at some data, and I don't think there's going to be a crash either. I don't think there's going to be a bubble. Uh, People have equity in their houses now, but I think a year from now, I I I personally don't think you're gonna see the same amount of appreciation in this real estate. I think that's gonna even out a little bit. Whether the supply and demand comes more into balance, I don't know. We're gonna have to have more. Gonna have to have more supply out there. But I from what I've been reading, the projection is that the rate of appreciation is going to slow.
I agree. I think we made that big bump. I think a couple of factors. I mean, obviously COVID and the drive to come to Florida was the factor. Interest rates were great. Um, that spurred it. I mean, you're getting 2 point something percent interest rates for a while. Um, People wanted to come down to Florida. There was a huge, and maybe we were ready for a correction. I mean, maybe it was the time where we needed, we deserved a little bump in the market, and then it just compounded that bump and another bump. And I agree with you that I think we did that big jump, and now we're going to see smaller increments, and I don't see it crashing. There's way too much cash in the market to crash like it did, back in 6, 7, 8. No. There's a big fear that people that are in forbearance on their mortgages and have been holding off, may come into that segment of the market may come into some foreclosure situation. I question that because if those people weren't paying and they appreciated as well, then they built some equity. So their spread should be pretty good, if not to catch up, to at least sell it without going into foreclosure. They should have enough spread to get out of the property. That may open up some inventory here in the next 4 or 5 months by the end of the year. But that's to be seen. You know,
Yeah, I don't,
the market that bought 10 years ago, had a mortgage, paid it down, but just couldn't keep up. And we'll see where that goes.
let's see here. Well, Chip, I really appreciate you being on tonight and just discussing some of the general real estate topics.
Yeah.
Taking time away from your family to sit here and chatting with us. And
Pleasure.
I know your sister Nancy's there listening in, and
she's over there.
maybe next time we'll have Nancy on.
Yeah, she'd love to. It's a different perspective. Nance handles a lot of the leasing side of what we do, and the leasing side of our properties, and that's a whole different animal today. We talked about people being priced out. What we're seeing is we're putting multifamily properties on the market for clients. They're renting them. They've owned them for 15 years, right? They put the tenant back in there at $700 a month for a 2-bedroom apartment. And they slowly bumped them up a little bit, but their buy basis was low, right? Now the building has just shot up to, $700-800 and the tenants are still at $950, right? And for the owner, that's a good return because they bought it for 60, right? But now the new guy's going to come in and say, look, I can't make that work. So you all have to go. So these tenants are devastated when we put these buildings on the market. And they go from 900 and then they go out and try to find something. And they're at 15, 16, if they're lucky, in probably not near as nice a neighborhood. And that's tough. I mean, there's going to be a lot of people that are going to be displaced from affordability, as this continues. And it's hard.
In our development here, there's a lot of sub-developments in this large development, and some of them have rental restrictions. It's based on a percentage of how many units are in the development, what percentage can be rented. But in the Great Recession, so to speak, you had smaller 1-story properties leasing for $1,200 a month, maybe the larger ones $1,700 a month. Those have doubled now.
Yeah.
So that's, man, if you can pay that much in rent, plus first, last, and security, you could put a down payment on a house.
Well, the problem, like you said earlier, is that they're not saving enough for the down payment, right? So you're paying $1,200 or $900, whatever you're paying, and then you have to go to the new rate, right? So you're not saving enough for the down payment, but now you got to pay $500 more to the rent. So now it's just you're not getting out of the cycle, right? You can't, where you used to be able to save that $500, you're now giving it to the landlord just to stay in a rental. And now it's even harder to save money. And that's a vicious cycle that in real estate, it affects a lot of people. Because if you take out that segment of the buying pool, it affects the market. And then you start getting more and more investors. And then these neighborhoods don't want all investor based properties. And then where does the workforce live? It's, that makes it tough.
Yeah, we could do a whole nother half hour on that.
We could. That's a whole nother animal.
A lot of
from a real estate market's good, Terry. all the realtors got to be happy out there.
You know, it's like politics. Everything is local.
Yeah.
What's going on in this development might not be the same as the development down the street.
No.
All right, we're gonna let you go tonight.
Okay.
Thanks a lot. I
Thanks.
appreciate you having on here. We need to get together and have lunch and catch up on a few things, but
Anytime.
thanks a lot, Chip. Have a good
Thanks
night.
for having me. I'll talk to you soon.